Well, good morning, everybody, and welcome to the Minnesota Real Estate Show. Thanks for joining us here. It's Sunday, July 16th, and we are live here at Love 105 FM for the Minnesota Real Estate Show, Sundays 10 to 11 a.m. It is a live show. We always welcome your questions, comments, thoughts. 612-294-6949 is how you can join us for any live calls throughout the show or wherever you might be seeing the social media stream. Don't hesitate to comment. Thank you for joining us. Again, the show is hosted by Mike Overson of Illuminate Home Loans, Scott Wolmering, myself, Ryan O'Neill of the Minnesota Real Estate Team Remax Advantage Plus. And in studio, my good friend, Mr. Adam Hartung. Adam, thanks for being here.
Hey, always fun, Ryan.
We got a lot to talk about today, and we're getting ready to go live on air. Again, it's Love 105 FM. I hope your Sunday is starting off well, everybody. 612-294-6949 is how you can join us. A lot to talk about today in the market here. Thanks for joining us. Hey, good morning, everyone. Welcome to the Minnesota Real Estate Show. Thanks for joining us. Hope your Sunday is starting off well. July the 16th, 2023, and we are live here with our friends at Love 105 FM. Sunday mornings, 10 a.m. to 11 a.m. for the Minnesota Real Estate Show, hosted by Mike Overson, Illuminate Home Loans, Scott Wolmering, and myself, Ryan O'Neill of the Minnesota Real Estate Team Remax Advantage Plus. We appreciate you joining us here. This is a live show Sunday mornings. It is interactive. We welcome your questions, comments, thoughts, whether you're seeing us on social media, whether you're catching us on air or streaming as well throughout the show. Please don't hesitate to join us, 612-294-6949. Want to welcome on our good friend, longtime partner, Mr. Adam Hartung, who is in studio with us today from Midwest Money Management. Adam, thanks for joining us.
Yeah, thanks, Ryan, for having me.
Yeah, we've got a really good show today. Scott is off; he is down visiting his mother, and so safe travels to Scott as he's out. And Mr. Mike Overson is out today as well. However, we have a lot to talk about today with the Minnesota Real Estate Show. A lot going on, Adam, I know in your world.
Yeah.
I see a lot of financial graphs and numbers, and we're gonna throw a lot of stuff at people today,
Sure.
right?
Yeah, we can do that for sure.
Yeah, we are gonna do that. This first segment, we do like to dive in a real estate update, mortgage update as well, and so we will dive into that the real estate numbers just to give you an idea where things are at here in the Twin Cities. So new listings, new homes for sale in the Twin Cities down 18% year over year. So 18% less new listings. And then pending sales, a little bit better, not a ton, but a little bit, down 7% year over year. 1,187 pending sales. And then the overall inventory of homes for sale in the Twin Cities is still down about 12% year over year. And I wanted to share one other number, Adam. Maybe we could get your comments on it. Our friends, again, at the Minneapolis Association of Realtors, the National Association of Realtors, shared a comment that said buyers everywhere are feeling the crunch when home shopping this year. But middle income households, those earning up to $75,000 per year, are perhaps experiencing the strongest competition overall due to the shortage of homes in their price range. The National Association of Realtors, they reported that the market is currently short about 320,000 listings priced up to 256,000, which is considered the affordability range for middle income buyers. As a result, these buyers can afford to purchase just 23% of the listings nationwide, a stark contrast to just 5 years ago when the same group, Adam, could afford half of the homes that were in the market. Any thoughts on that?
Well, do you think that some of that has to do with the rise in interest rates? I mean, that housing prices have not really come down, so affordability on the same price range of house has got to be a lot worse than than it was a year ago.
Yeah, and that's exactly with Mortgage Update that Mike Overson, Luminate Home Loans, he and his outstanding team provide. From an interest rate standpoint, this past week we saw across the board a little bit of a dip. Last week we were over the seven number into the low sevens. This week it's looking more like the high sixes for a 30-year fixed. So a little bit of a drop in rates, but Adam, we've been at this range now for a while. And,
Yeah.
and a lot of people were talking about, Mike said, hey, when when inflation numbers get better, that we're going to, a lot of people in the mortgage world thought we were going to see lower rates. That's not happened. What do you think, bud?
Yeah, this is a difficult time right now to try and forecast. There are so many competing forces that are really pretty strong actions on both sides. Like, I could make a strong argument for why rates should lower before the end of the year. And I could also make a strong argument, for why they might continue to rise. And it's difficult to know what force is going to win out. So, but it is looking less and less like we will see interest rates come down before the end of the year. Again, no one knows for sure, but I think it's less likely today than I think what people thought even 3 months ago, or certainly 6 months ago.
Yeah, if you are a home seller in this market, very interesting time right now. A lot of areas, price ranges, homes, Adam, that are priced correctly, that are marketed effectively, are getting offers and selling. However, what's interesting, and again, maybe I'll share the number, the average market time number in the Twin Cities. Again, even with historically low inventory, so we are down 12% in homes for sale in the Twin Cities compared to last year. Last year was already super, super low, but days on market now is up 38 days. So we're up 65%. So 38 days, average days on market. I think a lot of sellers in our market right now freak out if, hey, I've been on for a weekend, I've been on for 2 weekends, and I don't have 16 offers on it. And I think what's happening is we're getting to a little bit more of a normal real estate market. For the 20 plus years that I've been doing this job, that's a little more common. Having things sell with 15 offers in 2 hours isn't normal and common. And I think part of the job of a really good agent, a really good real estate agent, is to look at your market, where the home is. Okay, look at the neighborhood, look at the price range, and then say what is specific to that market for days on market, for activity with buyers in that market. And then communicating that to your client, because that's key. Because if you don't set the expectation up, you are inherently creating a problem with the seller that says, geez, I've been on for 3 days and I don't have 10 offers. You are a terrible agent.
That's expectation is the word that was going through my head the whole time you were talking about just having proper expectations. And that's hard. It's hard to give people proper expectations. One, because there's so many variables, you never know for sure. So it's giving your professional opinion on what is most likely. But especially sometimes people don't hear what they don't want to hear, right? So
Sure.
You can try and give them the expectations, but are you getting through to them? And there is such a tendency for, as human beings, to go through recency bias. So something that's been true for the last year or the last couple of years feels like it's true forever and always true. And so this idea that you list your house and you sell it in 5 hours is definitely in people's heads right now.
Yeah, one thing I wanted to share, and we've talked about it a little bit over the years on the show, is that from a value standpoint, if you own a property here in the Twin Cities, you own a property anywhere, you like to keep track of, hey, what's the value of this? And what's interesting is we've got on the Minnesota real estate team, we've got 2 wonderful agents, also appraisers, Michelle Lay and a gentleman named John Love. John down in New Prague, a longtime friend of mine. Well, John taught our team specifically what appraisers do when they value a property. And what's really interesting about it is, Adam, there's 2 main variables that drive the train a lot. One is the above ground finished square footage.
Okay.
So what John will do is he does 20%. If we're looking for comparables, he looks for a range 20% below or above whatever that the above ground footage is.
Yep.
And then also looks at the total square footage, 20% above or below as well, within 10 years build, 10-year built, similar style. So if it's a Rambler, we
Yep.
look for Ramblers, and then within a close proximity. If you're in an area that's got 50 other homes very close by, you go maybe a half mile out. If you're in a more rural area, you might have to go out a year, 2 years, 3 years. And then for comparables, we look at pending or solds up to a year. So in that case, it's trying to identify other properties. And so I guess the reason I want to mention that, it's hard for sellers sometimes. Adam, I just put in the new kitchen. I
was just gonna
got,
say that.
I got put everything into it. I put a lot of money into it. I dropped $30,000, and I'm so happy because I've just totally bumped up my real estate value. And a lot of people don't understand from an appraisal standpoint, there's only so much you can do to change those things I just
Right,
described.
because you didn't change your above ground square
Didn't
footage.
change
You
above-
didn't change the style of the house.
You're
You
built.
didn't change, none of those things that are the primary drivers of that real value. I do on this topic though. I do have a question.
Yeah.
So we were just talking about, you were just talking about what the appraisal value is. Now, you and I both know that there is some variation between what a house appraises for on paper and what it's going to sell for in the market.
Sure.
And I do think some of those other factors, start to affect things more when you go to the actual sale.
Right.
My question is, how much do you think they affect it? Like, again, if an appraiser is looking just black and white numbers, the above ground square footage, the year built, all these things, and yet you've got one house that's exceptional
Sure.
in so many ways, and then one that's maybe on the lower end of quality, or what shape it's in, how much variance do you see in what the house really is going to sell for compared to what it might appraise for?
Yeah, what John Love has told us is that appraisers make adjustments, of course, when they're doing the appraisal
Okay.
for those things that you're describing
Okay, they do.
specifically. And each category um, has different numbers on it
Okay.
that they will use. But you have to remember that, and again, we actually have a really good link. We'll maybe share it again on our social media stream for those that have interest. You and I talked about this on the return you get with improvements to your home.
Right.
And we had a friend who was asking about a kitchen remodel.
Yep.
And what percent they were going to get back on their home value with a kitchen remodel. And so we just,
And
to that
it was
point.
something in the range of 35%, by the way.
Yes.
That you could get back. So of the money you spent, you were only going to get back a third of what you put into it.
Well, and it also comes down to enjoyment. I always tell people with your house, it's like, hey, if you're going to be there, you're going to live there for 5 years, 10 years, 15 years, 20 years, whatever you think. Enjoy where you live. It's super important. And I think it's not always about return and what am I going to get back on this. But I do think it's an important consideration because we see a lot of people in the real estate world, friends, fellow agents, brokers listening as well, where people improve a lot.
Yeah.
They really dial in that basement, the lower ground footage. They do a ton of improvements, but you become the most expensive home on the block, the most expensive. And it's hard. It's
Yeah.
really hard. And
Yeah.
so that's where a good agent is going to help you analyze, talk about some of these different things, and just say, what's most important here from a value standpoint, and what will help me most long term. And I know, Adam, we're already up against our first break here at the Minnesota Real Estate Show. And we welcome your questions, comments, thoughts. Appreciate so many people joining us on the social media stream. Good morning, Bill Ebert. Appreciate your kind note. Karen Lunzer, awesome agent. A good morning to you. Pete Schrader, a longtime listener. Thank you for joining us as well, Pete. And those, again, tuning into Love 105 FM, we really appreciate you listening to our show. Questions, comments, thoughts. We're here to field any questions to help you wherever you might be at in the buying, selling, investing process. We will be back after the break. Thanks for joining us, everybody. I also saw a comment here. It says you should feature my open house from 12 to 2 today at 1728 Palace Avenue. St. Paul, Minnesota. Absolutely. I don't see your name on that comment. Sorry, with this restream, you have to have the app downloaded in order for me to see it on, or download it on your computer in order for me to see it. So I don't see your name. I apologize for that. But great open house, 12 to 2. So a lot going on, Adam. A lot to talk about with just in general. I know I'm throwing a lot out there.
No, that's okay. I'm curious. You were doing the housing update and the inventories. What are you seeing for prices? Like, what has been the price trend so far this year?
Yeah, so prices are year over year. The median sales price actually dipped a little bit, down 1.3%. It was at 375 last year, now down to 370. So a slight change,
Sure.
but
Not a big one.
not a big drop. No.
No.
So from affordability standpoint, again, interest rates rising quite a bit. That
Yeah.
affects a lot of people.
Yeah.
Thoughts on that?
Well, again, I am super curious to know what is going to win out and what's going to happen, because on the one hand, this goes back to what I said, I could make a strong argument that those rising interest rates almost have to bring house prices down some, or they're not affordable. At the same time, the inventories are almost nothing and people need some place to live. And so, what's going to give? Is it that people just aren't going to be able to buy those houses until the prices come down, or are they going to have to spend a bigger percentage of their disposable income, just to have a place to live?
Yeah. Again, Adam Hartung, love having Adam with us today. Adam, for those of you that don't know, and I'm going to share this on radio too, Adam was super instrumental to me personally getting involved with real estate investing back in 2001. Adam owned some investment property, and we met, as friends, and you were a huge help, Adam, to help me get into real estate investing.
Yeah, it is funny. I do remember that very distinctly, us having that conversation about, I was living in a duplex that I lived in one half and rented out the other half. And I said, you should do the same thing. And 6 months later, I think you had 5 properties.
So I think part of what we'll talk about today is a little bit of investment property. And I think it's great having a financial mind like Adam with us in studio, because it's something to think about. It's something to think about regardless of the market conditions, regardless of interest rates, regardless of anything. Investing in real estate, I think, is just one of the best absolute ways to build long-term wealth. And I think doing it anytime.
Yeah. No, I think that is definitely true.
Anything to add on that? As I put you on the spot.
We've got 3 young people on our team, and 2 of them just bought first-time houses in the last month and a half. So yeah, very exciting for them. Technically, one of them, it wasn't their first-time house actually, because one of our advisors owned a rental property and sold it. He bought it when he was in his early 20s, but this is his first home that he bought to live in. So
okay. Yeah, very good. Hey, we're getting ready to go back on Love 105 FM. It's Sunday morning, 10 to 11. Again, Mr. Scott is out today down with his dear mother. Safe travels to Scott. Mike Overson and his team. Mike's doing wonderful work as always. Appreciate Mike and his group and everything they're doing. We're going back live on air here. And thanks again for joining us. Top of the morning to you. Sunday morning. It is Sunday morning at Love 105 FM, 10 to 11 a.m. This is the Minnesota Real Estate Show. We are local. We welcome your questions, comments, thoughts, and we hope everybody's having a great summer. Whether you're up at the cabin with family, relaxing, boating, jet skiing, fishing, like Mr. Mike Overson loves to fish, whether you are working, whatever you might be doing this weekend, we hope it's a good one for you. Did want to give a nice shout out again. My friend, Miss Karen Lunzer, has an awesome listing. She has an open house today on a property, and the address is 1728 Palace Avenue in the Mac Groveland area of St. Paul. It's a 4-bed, 2-bath home, Adam, $400,000. And she mentioned it's move-in ready for a family, or you could also rent it out with a few colleges in the area. Again, there's going to be an open house today, Sunday, 12 to 2, 1728 Palace Avenue in Mac Groveland. Wonderful area. Karen mentions you could rent it out. During the break, Mr. Adam and I were talking. I got to give you a ton of credit, my friend. You helped me move out of my dear brother Timothy's house. I was renting a room for all you young people watching. I've been there. I know it. I think I was paying like $400 a month or something. I'm renting a room, living down in the cave
Yeah.
with my dear brother Timothy. It was fun. We had some great roommates, loved it. But I kind of scratched my head one day and I said, okay, I'm done with college. Wasn't a great student, admittedly, done with college. I'm now an adult. I just went to this event by this guy named Adam Hartung. Wow, he's super inspiring. He knows his financial stuff. Ryan, it might be time to grow up and think about buying something. But of course, like a lot of young people, I didn't, the money's in short supply. You're trying to figure out what you're going to do. And so went to your event and you said, Ryan, think about buying some investment property.
Yeah.
Talk about that a little bit.
Well,
Again, there was nothing in it for you.
You and I were the same age. We'd known each other. No, you're right. There wasn't anything in it for me in the short term, but in the long term, there certainly was. Again, you become a great client over the years, and some of this was the long-term wealth building that you talk about of just being involved in real estate. So yeah, I was a young single guy like you were.
Were you living in a basement?
I was not. I had purchased a duplex back in 1996.
There you go.
And I was living in half and renting the other half. And I still remember the numbers very clearly. My full mortgage payment on that duplex at the time was $935 a month. And the rent that I was charging for half of it was $685 a month.
Okay.
And so I was living for almost nothing.
Wow.
And, in terms of absolute rate of return on investment, I sold the duplex now a couple of years ago and did well on it. It wasn't the highest rating return investment that I've ever had, but I've always said that I think it was the best and most important investment that I ever made, because it is the investment that really set the foundation for everything else that I did. All the other investments that I've made over the years, really kind of started with that foundation. And in this case, it was one that allowed me to live, almost rent free while I was still gaining appreciation on our property. So
yeah, if you are currently renting right now, I just want to throw it out there. Just know, and we've got a couple phone callers here we'll go to in a second. If you are currently renting right now, think about it. It's something to think about. You can use an FHA loan. So it's 3.5% down. So it's less than what you hear of 20% down, having all this money, 3.5% down. And excuse me, you live in a duplex, you live in a 3-unit, a 4-unit property. You rent those other ones out. You get some income coming in that helps you afford it. And you live and you now own the property. So now you're building some equity. What is equity? Equity is something over time. Maybe you buy it now for 300 or 400. You hold on to it for 2 years, 5 years, 10 years, 20 years. Hopefully over time, values increase. We can follow history on that, what's happened in Minnesota, and they have slowly and steadily about 2.25% are the numbers, the most recent census numbers on census.gov and that includes inflation. But we can talk more about it. I know we've got a caller here. The caller, they just dropped on us. Did they drop? Yeah, they dropped. That's okay.
right. We'll call back.
Yeah, feel free to call back. But I think the interesting thing, Adam, is just thinking about that. It's hard to step into the pool. It's hard to take that leap of faith because there's risk.
It is.
There's unknown. There's different things on, so it's hard. And again, I just think, if you are renting, you are a young person, you're thinking about, man, I can never get ahead in life. Think about it. Think about, seriously, buying something, because I tell you, and again, I'm speaking from experience, your future self, 5 years, 10 years, 20 years down the road, when you wake up, you're going to say, wow, I'm really glad I did that. And even with a guy like me that bought a property on a very busy street, not the best location, a lot of negatives about it, it has still appreciated significantly in 20 years.
So that's, One of the things, obviously, inflation has been a big topic recently. So people are much more aware than they were a couple of years ago. Over time, and inflation is a normal thing. It's not normally as high as it is right now, but there has always been inflation in the United States. And one of the advantages of owning that people fail to really grasp how big of an advantage it is, and that is this idea that yes, if you buy a house today, maybe the payment is the same or even more than if you were renting, but the principal and interest portion of that mortgage payment is going to stay the same for the next 30 years if you have a 30-year fixed mortgage. So 5 years from now, 10 years from now, when rent prices have continued to rise, that principal and interest payment is going to become a smaller and smaller percentage of your budget.
Yeah, we got another caller that came in. Let's see who's on the line. Thanks for calling the Minnesota Real Estate Show. How can we best help? Hey, David Meyer. Good morning, Mr. David Meyer, awesome agent on the Minnesota Real Estate team. Thanks for calling, buddy. What do you got? What do you got for us today? Okay. Okay. So they all of those homes sold above list price. Okay. Hmm. So, so every one of them, interesting, sold below the price. Interesting. So they all had a price reduction before they came down. Interesting.
I was going to ask you, David. David, this is Adam Hartung. Hey, yeah, I'm curious what you're seeing in terms of is it hard to convince sellers not to overprice their house because again everybody says, hey, look, if there's low inventory, all this stuff, I should be able to get my number. Is that a conversation that you find is difficult to get through to people on? Yeah. Yeah. So Dave, yeah. So in this case, David again explaining an example of meeting with a seller and seeing too aggressive, too much, too aggressive pricing in general.
from a lot of the homeowners as a result, seeing price reductions over time, and just in general, seeing a market that is not quite as crazy busy. David, we are up against our halfway break here at the show. Really appreciate you calling and your insight on this. How did the meeting end with the for sale by owner? What did she decide? All right, man. Yeah, plug for an open house. What do you got, bud? All right, bud. Well, thanks for calling in. Thanks for sharing that. Hope you have a good weekend. Okay. Yeah, you
Yeah.
too. You too.
Thanks,
This
David.
we're at the halfway point again. All right, at the Minnesota Real Estate Show. Got a great second half coming up. A lot to talk about. We're going to dive in specifically to Adam Hartung's segment as well after the break. We'll be right back. 612-294-6949. Thanks, everybody. Sorry about that. I know you couldn't hear it on air, but specifically what David was saying is that he's seeing, he met with a for sale by owner, seeing in talking to the for sale by owner, all of the similar listings that had sold in the area had price reductions. And this particular for sale by owner that he was meeting with was having a hard time understanding the pricing and trying to get that through. So that's essentially what he was saying, and just it kind of reiterates or confirms with our market a little bit of a slowdown, Adam.
Yeah. Well, the other thing, because of the higher interest rates and the higher pricing, there really is a limit now as to how much somebody can overpay for a house.
Sure.
It used to be when houses prices were going up much more rapidly, but interest rates were so low, you'd look at it and say, okay, well, if I bid an extra $20,000 on this house, how much is it going to change my payment? And you look at the numbers, and it's this much that it changes.
Yeah.
Now we're in a situation where trying to bid that extra $20,000 to get the house that you want might just be impossible. Like, you might literally not have the financial capacity to do it.
Yeah, absolutely. I think it's a really good point. Again, we're going to dive in with Adam Hartung. I really encourage people, as you're listening, watching, wherever you might be in your real estate investing, your financial journey, don't hesitate to reach out to Adam. Adam is someone that I've referred so many people to. My sister, my brother Tim, family members, friends. He and his team really have just a very nice way of helping you wherever you're at. Whether you have a lot of money, whether you have no money, whether you have great credit, whether you have terrible credit, whether you own 100 properties, whether you own 0 properties. This is the type of guy that's going to sit down with you and help you wherever you're at. I think people really appreciate that about you, Adam.
I appreciate you saying that, Ryan. And it is something that we talk about on our team all the time. Obviously there are things that we need to do to drive revenue for the firm and all these things, but at the end of the day, what all of us are in it for, why we're in the business, really is to help people. And so that is our first and foremost focus every day, and it's just trying to figure out how can we serve our clients better, how can we do a better job of helping people.
Yeah, with the interest rate market, so interest rates have obviously risen significantly. How has that impacted your world? Bonds, stocks, all of that?
Yeah, well, so last year, 2022 was, according to Ned Davis research, 2022 was the worst year for U.S. bonds since George Washington was president. So
But what year was that?
Yeah, long time ago.
Worst year for bonds.
Worst year for bonds in the United States, and I didn't do the research on that, but I can tell you it was an awful year. And the reason why is there is an inverse relationship between interest rates and prices of bonds. So the reason why bonds have been doing well for the last 40 years years prior to 2022 is that we were in a 40-year rate cycle where interest rates had been gradually getting lower and lower and lower. Lower rates means higher prices for bonds. So as an investment, it was almost a no-brainer investment. However, when interest rates rise, which they have, bond values fall. And so bonds did not have a great first half of the year. They did not lose significant amounts of money like they did last year, but it was not good. It's not been good for bonds.
What were bonds down? Kind of the aggregate.
So I think the ag in 2022, if I remember the number correctly, was down 16%. I could look it up, but I think it was down 16. But long-term U.S. Treasury bonds were down 30% in 2022.
Why?
Well, so the longer the term on the bonds, the bigger the impact of rising interest rates. Because if you think about it, when you buy a bond, you're essentially buying those interest payments for a period of time.
Sure.
Well, when you're buying a 30-year period of time with interest rates and interest rates go up, it has a bigger impact than if it was a 5-year bond, for example. So the longer the maturity on the bonds, the more they were impacted by the change in rates.
Interesting. Very interesting. Again, we're going to... after the break, we're going to talk more with Adam. We've got some listings to feature. We've got a couple questions that have come in by text message as well. 612-294-6949 is how you can join us. Mr. Scott is out today visiting his mother. And Michael, Mr. Mike Overson, is also out and about with work, family here today. So it's just Adam and I. We appreciate you listening to us, Jib Jab. We're getting ready to go back live on air on Love 105 FM. Again, it's 612-294-6949 is how you can join us or comment on the stream. Well, here we go. Hey, welcome back to the Minnesota Real Estate Show. Thanks for joining us. Hope your weekend, hope your Sunday's going well. I got to give a dear shout out, Adam, to a very kind friend of mine, a gentleman named John Tupy. John is from New Prague. John and I went to high school together. John is 1 year younger. So when I was a senior, John was a junior. And he was the captain of the football team, a wonderful athlete. Just an all-around class act of a guy. Just one of these guys, just an absolute class act. Well, he went to college. While he was in college, his second year, he started having headaches and went into the hospital, and they found a very large brain tumor, operable, thank God, but a very large brain tumor. John went, shall we say, to hell and back. And today, down in New Prague, we are celebrating 25 years for John Tupy of being cancer-free and enduring this struggle. And John is just an inspiration. He's a wonderful guy, huge inspiration to me and so many others. So the community's coming together to support him, to rally behind him. And he's a man of faith. His wife, Penny, they adopted a son, Joseph. He's just a great guy. And so John is, you talk about being appreciative and being grateful for things you have in life. John has had a really tough life, but he's positive, he's hopeful, and he's just such a good-hearted guy, Adam.
Yeah, that sounds great, Ryan. It's stories like that that just remind you how many things we all take for granted, and what a challenge life can be sometimes. But your attitude on everything is what makes the difference.
Yeah. So cheers to you, John, and your whole family. Look forward to seeing you here later today after the show. We do have a couple of the listings to touch on here. Again, these are with the Minnesota Real Estate Team with RE/MAX Advantage Plus. Adam Benedict, Mr. Adam Benedict. He's got a couple. He's got one in Minneapolis. This is $190,000, 190. It's 1912 DuPont Avenue South, number 401. It's a fully updated condo, and it's in a great, conveniently located neighborhood. It's got a fully remodeled modern kitchen, spacious open concept layup, king size primary suite, completely updated full bath. It's got off-street parking. The building has beautiful updated common spaces, Adam, and a secure entry lobby. It is $190,000. That's 1912 DuPont Avenue South, number 401 in Minneapolis. And then he's got one over in Golden Valley, 2141 Scott Avenue North in Golden Valley. It's a 4-bed, 3-bath, beautiful Golden Valley Rambler. It's on a great lot with a wonderfully landscaped yards. It's got a large open concept living dining space, a south-facing sunroom. You like the sunlight. An original stone gas fireplace, 4 bedrooms on the main level, king-size pantry, or on a king-size primary, sorry, king-size pantry.
Hey.
You're hungry.
Yeah. My wife would like that.
And a massive storage space on the lower level that could be finished to add square footage. That's priced at $675,000, 2141 Scott Avenue North in Golden Valley. Nice place, Adam. Really nice place. Nice property.
Great agent too.
He is a great agent.
Guy.
I do want to formally introduce Adam Hartung to get to his segment. You've been so patiently waiting. Here. Adam Hartung is a certified financial planner professional, accredited investment fiduciary. He's a president and founder of Midwest Money Management, located at 17316 Kenyon Avenue in Lakeville, Minnesota. Securities offered through JW Cole Financial Inc., member FINRA and SIPC. Advisory services offered through JW Cole Advisors Inc., Midwest Money Management, and JW Cole Financial and JW Cole Advisors are unaffiliated entities. Good morning again.
Hey, yeah, it's fun to continue.
You had a great discussion during the break. You said bonds last year had their worst year since the times of George Washington.
That is correct. According to Ned Davis research, they said that 2022 was the worst year for U.S. bonds since George Washington was president. So I didn't try and verify that data, but it was a terrible year for bonds.
Because, again, you said it's inversely related to interest rates.
That's right. As interest rates rise, values of bonds fall. And it's one of the reasons, we were talking earlier about will interest rates fall by the end of the year? The people that are in the camp that still believe that interest rates are going to fall, believe that bonds can still have a very good year yet in 2023. And they could be right. I mean, really, we don't know for sure. But what we do know is that the Fed has telegraphed, and they meet again this coming week. And I think it's priced in about a 90% chance that interest rates will rise again. So rising interest rates means falling bond prices. However, if we get to that point where things reverse course and interest rates go lower, then we will see higher bond prices. And so everybody's kind of waiting for that moment to decide, when's the right time to own fixed income bonds.
You again, Adam, you help people, listeners, whether they have a lot of money, they have no money, they have great credit, bad credit, whether they've ever talked to a financial planner, whether they're too scared to talk to a financial planner. You are a welcoming guy. Your firm, regardless of where you're at in life, you sit down with people, you talk to people, you try to help them. And that's refreshing, Adam. You know what I mean? You don't have to have $1 million in the bank to go sit and get a private appointment. You guys genuinely try to help everyone. Partly the reason I've referred friends, family members, neighbors, everyone to you guys, because I think everybody needs a guy like you in their corner.
Well, I appreciate that, Ryan. And we do, our team takes that obligation seriously, that we want to be there. We want to help our clients. It's interesting. Obviously, we do investment management, and I could talk about all the things that we do for our clients on the investment management side to try and protect them, especially when markets get volatile. And that is where our revenue comes from. And as a firm, we make our money by managing assets for clients. But it's not where our focus is. I mean, what our value as a firm and our focus is really on helping clients with everything that affects their finances. And what I know is, when we give people pieces of good advice, you talked about the advice that I gave you early on to buy real estate instead of renting from your brother. You mentioned that there was nothing in that for me immediately. And maybe that's true. Maybe there wasn't, and maybe there never would have been. But the reality is it did help you tremendously. It did put you on a more sound financial path.
Got me on
down the road, that made you a better client to us as well, because you did have other assets to invest. And so, we have the abundancy mindset, the idea of, if you help people, it comes back to you. And so, there have been lots of times where we've had clients, whether it's their kids or whether it's just a young person who heard about us or was referred by a friend. And maybe day one, we spend time with them, get them on the right path, and maybe there's nothing in it for us directly as a firm. But sometimes 6 months or I've had situations where it was literally 15 years down the road, somebody comes back and says, hey, do you remember when we met and you helped me with all this? And now now I want to work with you, on a more professional level. And so that is definitely our attitude.
Great approach. It's also how we work at the Minnesota Real Estate Team, what we're about, providing solid information, low sales pitch, trying to help people wherever they're at, the buying, selling, investing process. It's a long-term game for us as well. We are at the final break here. We're going to talk after the break about Adam's halftime event coming up that I would encourage everybody to check out, a client or otherwise. So we're going to talk more about that. This is the Minnesota Real Estate Show. Thanks for joining us here, everybody. Again, it's been a fun show. We do appreciate you tuning in. And Sundays, it is, again, Sunday mornings, 10 to 11. We're here always talking real estate related. And with the market, it will be interesting to see what happens the last 6 months of the year. It seems like interest rates are kind of here at this point to stay for a while. So I think our market will probably just adjust that this is kind of the new normal, Adam.
Yeah, well, we'll see. We still have what's called an inverted yield curve too, and I don't want to get too technical on this, but an inverted yield curve means that long-term rates, like mortgage rates, are still actually lower on the long side than they are on the short end of the yield curve, and that's not normal. It can't really stay that way forever. And so we talk about this being the new normal. Even if the Fed starts lowering rates on the short end, they'd have to lower them a ways to be lower so that we get back to a normal yield curve. So it'll be interesting to see what happens on the long end of rates, and that's mortgage rates. That's where your listeners care about from a real estate
So how
standpoint.
does that affect, though, with the yield curve? It goes the other way. How would that impact people?
Well, depends on what you're asking about, who it's going to impact. But what I'm saying is that there's not as much room for rates to come down on the long end as people think. Even if the Fed starts cutting short-term rates,
I see.
it may not translate into
lower
a lower
rates.
rate on the long term, like mortgage rates. So again, getting back to, I guess, reinforcing that point that you said about that maybe the higher mortgage rates are here to stay.
That's good to
Or
know.
that they don't have a lot of room to come down as much.
Yeah, especially fellow agents or working with clients. That's good to know, because I think people are thinking, hey, we're going to get low rates again at some point, perhaps.
And I'm not saying it couldn't happen,
Sure.
but I wouldn't count on it. And they don't have as much room to move lower as short-term rates.
How's the stock market done this year?
Unbelievably well. I mean, far better than anybody's expectations. And I'll talk about this on air as well. But, we came into the year with the consensus opinion of the Barron's Roundtable. At the end of 2022, going into 2023, for the first time ever, the consensus opinion was that the stock market would lose money in 2023.
Wow.
And that has never been the consensus opinion at all. I mean, but analysts by and large are a very bullish group. And
Sure.
so they have never had a consensus opinion that the stock market would lose money. And instead, in the first half of the year, the S&P 500 index was up almost 17%
Oh my
in
gosh.
6 months. So yeah, the market has done far better than anybody expected, including myself. It's done far better than I expected it to.
Why?
Well, that's a good question, and I have some theories on that. So,
Yeah.
maybe we'll talk about that when we get back on air.
Yeah. Again, interesting stuff. 612-294-6949. We do have our free seminars coming up here. We've got a first-time homebuyer seminar led by Mr. Charlie Limer, coming up July 20th. So it's actually this coming Thursday, July 20th, 6:30 to 8. We've got our 101 investing property seminar that I put on, which is in August, Tuesday, August 15th, 6:30 to 8. And then we've got our 101.5 seminar, which David Meyer does, which is actually in July as well, Tuesday, July 25th, 6:30 to 8. That will be a great one as well. You're interested in investment property, want to learn about it, kicking it around, don't hesitate to check that out. Again, you can go to mnrealestateshow.com to see those, or just mnrealestateteam.com to see those seminars as well. But we're getting ready to go back live on air here on Love 105 FM. Yeah, welcome back to the Minnesota Real Estate Show. One last listing to touch on. Mr. Joe Mack, the Minnesota Real Estate Team RE/MAX Advantage Plus, has one up in Nevis. And this is, you've got to see the photos
It's a
online.
cool looking house.
Yeah, a sight to behold. The address is 23760 County 80. 23760 County 80 in Nevis Township, Minnesota. It's a 5-bed, 3-bath home, 4,300 square feet. It's listed for 1.8 million. And a description of this: it has 300 feet of prime shoreline. It is a highly desirable lakeside living. Again, situated on the coveted shores of Lake Beltane. It's a 4,300 square foot home. It has, again, 5 bedrooms, exquisite hardwood floors, soaring vaulted ceilings, a charming bonus bunk room. Every aspect of this residence has been carefully designed to create an ambiance of refined opulence, Joe says. I love that.
Wow.
The property further impresses with its log guest house, conveniently located, attached 3-car garage, full unfinished basement that holds lots of potential for customization. And it's a secluded retreat, Joe says, with an idyllic oasis of serenity. Again, looking at this property from what's cool about it is from an Airbnb standpoint. I know the owners have used this, and it's a huge opportunity in that space as well.
Just looking at
oh my gosh! So for companies, families, people that are looking to go somewhere for a week. My brother Tim has actually a cabin also up on Lake Beltane, so he knows this property really well. Yeah, he knows this property really well.
Okay.
Beautiful property. Again, check that one out. 23760 County Road, County 80 on Lake Beltane. Yowzers! If you're looking for a cool property, Airbnb opportunity, check that out. Adam, last few minutes of the show, we were talking about bonds a little bit. I asked you, you said the stock market is having a record year.
Yeah, it is not an all-time record year, but it is one of the best first halves of the year. The S&P 500 index was up 16.8% in the first 6 months of 2023. And the thing that's I think amazing about that is going into 2023, the Wall Street analysts that make predictions for the market were the most bearish they have ever been. The Barron's Roundtable, which is 10 Wall Street strategists that give their prediction for year end for the S&P 500 index, and the consensus opinion in January was that it would be negative for the year. And that is the first time the consensus opinion has ever been negative. And yet here we are halfway through the year. The market's up almost 17%. Now, their prediction was for year end. So you could look at this and say, hey, there could be a huge decline in the second half of 2023, and their predictions could end up being correct. So it is still possible that we'll get a market sell-off here and make those Wall Street analysts look like they knew what they were talking about. But certainly there's no signs of that in the market right now today.
Why were they so wrong, and why did it go up so much?
There are all kinds of answers to that, but I'll tell you one of my theories on one of the biggest driving forces right now is in the United States economy. About 70% of the economy is consumer spending. So we as consumers, as United States citizens, make up 70% of the economy. So we went through the COVID lockdowns back in 2020 and people were out of work. All these things happen. And you think about that factually and you just say, well, geez, we should be in awful shape. Consumers should be in terrible shape. But the government stimulus, the government printed $4 trillion during the lockdowns and the programs that they passed to follow the COVID lockdowns. They gave away in stimulus money 2.5 times as much money as people lost in wages. So just as a country as a whole, if you look at the entire populace and you looked at how much wages were lost by the economy being shut down, the government gave in stimulus 2.5 times that amount back to the people. At the end of 2020, so going into 2021, at the end of 2021, so going into 2022, there were $2.1 trillion of excess savings in the United States consumers' hands. And the United States consumers are not great savers historically, but we had accumulated an excess $2.1 trillion of savings because of all of this stimulus money that was just given to people. Well, over the last 18 months through 2022 and the first half of 2023, we have spent down those savings from 2.1 trillion to 0.4 trillion dollars. So I think what is keeping the economy afloat right now is this excess savings that the consumers have been spending over the last 18 months. Now, I don't know that for sure, but I did the math, and at the rate that we've been spending this money, it will be gone approximately 5 months from now. So somewhere around December is when all of this excess stimulus money, assuming they don't send another round out or do something different, but the excess stimulus money will be out of the consumer's hands by around December of this year. And I think when that happens, we're going to have a much better idea of how strong the economy actually is without all this excess money that we printed.
Interesting. Very interesting, Adam. That is, what does that mean for people?
Well, it means for the time being, there are still opportunities to make money in investments for sure right now. Again, it will be interesting to see, first of all, whether or not my thesis is correct, whether or not, we're going to find out in December that this really is what's been supporting the economy. And then it'll be interesting to see too what the politicians do about it. If this money being out of people's hands is what starts the economy to go south, will there be a push to pass some new level of stimulus? I mean, there's a whole group of economists now, or the intellectuals who believe in modern monetary theory, which says that the deficits don't matter. We can print and spend as much money as we want to indefinitely. And I'm not in the category that believes that, but in the short term, they've shown that they can do it, and they can certainly prop up the system if they want to.
Adam, you've got an event coming up. Tell people about that.
We do. Every year we have two big events, and they used to both be live. So in January, we do our forecast event, which is a live event that we invite all of our clients to. And then at the end of July, we also do a halftime report. And that also used to be a live event. But based on clients' requests, we have clients in 18 different states now. And so the July event, every year we do as a webinar. We do it as a recording. Our targeted release date, and I say targeted because there's a lot that goes into finishing all this up, but our targeted release date is Friday, July 28th, so
okay.
A week from Friday. If any listeners are interested in seeing that report when it comes out, we're going to talk about what happened in the first half of 2023. We'll talk about where are we now, and then we'll talk about where do we think things may be going in the second half of 2023, and what are some of the analyst predictions. So it's a fun event. It'll be posted to our website, which is midwestmoneymanagement.com. So if you want to just check on the 28th or later, it should be on the site. And if you would like us to send you an email letting you know when it's released and sending you a link to that, you can contact my office directly, and you can call us at 651-204-3000. Again, that's 651-204-3000, or there is a contact us on our website as well at midwestmoneymanagement.com. If you let us know that you'd like to get that link to the halftime report, we'll send that out to you just as soon as it's available. And if you want to have any other questions for somebody on our team, want to sit down with somebody or just have some questions, you can let us know that as well.
Yeah, great job today. It was fun having you on. I appreciate you co-hosting today.
Yeah, hey, it's always fun to sit in the big chair,
Yeah, it's been fun. It's been super awesome having Adam Hartung with us. And the show always zips by quickly. We're already nearing the end. Again, if you are in the market, a buyer, a seller, a real estate investor, if you're simply just wanting to know about your home value, again, you can go to mnrealestateshow.com. Click on your home value on the top. It's a new tool that we have that helps you track your home value over time in current market conditions, something unique to our team. Again, mnrealestateshow.com, and click on your home value on the top. It's kind of a cool newer feature. But again, appreciate you listening to us here at Love 105 FM. We're going to be back next Sunday again with Scott Wolmering, Mike Overson, Adam Hartung, myself, Ryan O'Neill. Again, hope everybody enjoys the rest of this weekend. If you have questions, comments, thoughts, please don't ever hesitate to reach out, 612-294-6949 throughout the week at all too. And again, we've got those seminars coming up this month, mnrealestateshow.com. Thanks again, everybody, for listening. I hope you enjoy the rest of the weekend. Take care. Thanks for watching on social media. Adam, great job, buddy.
Thanks, Ryan.
We will be back next week again. Enjoy the rest of this weekend, everybody, and take care. Thank you.